Hi guys, my name is Ishika Jain and I welcome you to Brainvibe. Today, in this episode, we will talk about diversifying your portfolio. To be precise, we will talk about what mistakes a trader do while diversifying his portfolio. Before starting, I would like to know from you guys, do you prefer diversifying your portfolio? If yes, then comment down why in the comment section below. And if you don't prefer diversifying your portfolio, comment down N in the comment section below. Please pause the video and comment down. First of all, let's understand what diversification is. Diversification means to manage your risk, investing in different number of stocks so that even if one stock crashes, the other stock holds the investor's position back in the market. This comes to your mind when we are not sure about the stocks that we held. This means basically we are protecting ourselves from the things we are not aware of. Diversifying in few stocks is important, but there are people who invest in more than 30 to 40 stocks. I know you might be surprised, but what they do is they invest, let's say, 5 stocks in one company, 10 stocks in another company, 15 stocks in another company. In this way, they are not focusing on one company. Of course, selecting a few stocks for a concentrated portfolio requires a lot of attention and analysis. An investor who wants a concentrated portfolio needs to put his work in and must know as much as possible about their investments. They need to track the financial statements. Also, they need to track the business environment carefully. The biggest argument for diversification is protection from risk. Thus, when you don't diversify your portfolio much, you are prone to risk. But I have a solution for this. In this solution, we will also diversify our portfolio, but only in limited stocks, and we will also mitigate the risk. How can we do this? So what we can do is, we can invest in uncorrelated sectors. Let's say we can invest in technology sector, and also we can balance our portfolio with consumer staple sector. In this way, we will balance ourselves from higher risk to a more defensive one. If you are knowledgeable about a particular stock and believe in its long-term potential, then you can ride out the storm. You can buy more stocks at discount prices and collect dividend income until the market turns around. Here, I have a bonus point for you all. In a portfolio, one must have a stock which gives you good dividend income. Now, each sector grows at a different pace at a different time. One need to analyze which sector is bullish in a particular time. Remember, if a sector is bullish, that doesn't mean that all stocks of that sector are doing good. You need to filter out which stock is performing well, and that requires deep analysis and time. Diversifying in n number of stocks won't give us much time. Now, talking about diversifying your overall portfolio, all your investments, one should not put all the eggs in one basket. Everyone has a different risk appetite. A 20-year-old is an aggressive risk taker, whereas a 50-year-old is a defensive one. For a 20-year-old, the classification would be, let's say, 90 equity and 10 debt, whereas for a 50-year-old, the classification would be reversed. If you're looking for a fixed income securities, you can invest in bonds. Generally, bonds have lower yields, but there are some international bonds which may give you higher returns. You can also invest in mutual funds through lump sum or SIPs. When one is investing in stock market, he need to diversify in two markets, that is domestic as well as international. A good mix of international stocks will protect you from the local stock market shocks. Stocks in US based companies perform differently than the non-US based company, as the opportunities provided are different in other parts of the world. Here, we conclude that diversifying in more than 7 to 10 stocks is not much advisable. Here we end our discussion about diversification in stock market. At the end, I would like to emphasize on rebalancing your portfolio. One should keep an eye with the market trends and also know about his goals and strategy and rebalance them. So here I would like to end this video, and I would also like to inform you that our company Brainvibe has launched their own application wherein you can manage your own portfolio. So the link for the same would be given in the description box below. Do check it out. If you like this video, give it a big fat thumbs up and don't forget to subscribe to our channel. See you in the next video.